Hi everyone, my name is Lee and welcome to the Tesla Economist. In this video, I wanted to continue on from our production forecasts and work out some profit forecasts. So this is just for the vehicle side of the business. In fact, we won't even factor in the potential of FSD in it, although we will include the FSD and enhanced autopilot that we have today, i.e. keep a similar FSD profit per vehicle included. This is also not my 2030 price target. This is just going through the annual production for each year until 2030 and estimating the financials. This model is also available for download on Patreon. Also, like I say, I do read all your comments, and a lot of people were struggling with my 2023 new location, producing 50,000 units in the first year. Some of you even suggesting it might take as long as 2 years to build. Now, bear in mind, Berlin took as long as it did due to all that red tape and environmental issues. And as for Texas, well, this was not just a factory. For starters, it was 2 factories, the world's largest battery factory and Tesla's headquarters. The Shanghai Model Y factory was constructed in just about 10 months, and that was well over 3 years ago. Tesla learned a lot from their last factory builds. These new factories should take less time to build and will ramp up much faster. They are not messing around. They're not going to choose a site that will take forever to construct. We're going to get the new location announcement later this year, which likely means they already have purchased the land and secured permits and about to break ground. Therefore, the new factory should be operational next year, and I estimated it could produce 50,000 units next year. It should, in theory, ramp up much faster than any other factory prior. On the other hand, I did have a lot of numbers to estimate, so perhaps 50k was a bit of a stretch. So I'm glad you're checking my work anyway, but in the overall picture, it doesn't make much difference. Alright, anyway, this should be a fairly simple exercise. We just need to calculate the ASPs of the vehicles for each year and then the margins. The rest from there is fairly straightforward. So let's begin. Once again though, these numbers will be indicative. I can't put too much time into forecasting each and every year as there are still so many moving parts anyway, but I think we will get a good enough idea. We're not going to adjust the prices for inflation as it would be impossible to know, and we want to compare with today's prices anyway. In the latest Q2, Tesla's had an average selling price of $56,000. However, we know the prices have risen significantly since then, although they won't all kick in immediately. On top of that, it's the more expensive Model Y that is ramping up the most too. However, we need an average for the year, so let's use 59,000. For 2023, there'll be a lot more Model Ys for sale, and the price rises will be in effect. Not only that, we also have the Cybertruck, which is going to be at least $80,000. Especially if it's the quad motor. So I'm going to raise ASPs as high as $63,000. There'll be more rear-wheel drive Model Y expansion too, which will bring down the ASPs somewhat. Although there is a chance ASPs will be even higher if Tesla have to raise their prices due to the tax credit. For 2024, I'm raising ASPs even higher due to more expansion of the Cybertruck and possibly even more semi-trucks being ramped up. The ASP will be $65,000. Alright, now to 2025. Possibly we're at the level where Tesla are starting to expand in more standard range vehicles, possibly with new battery technologies as well, perhaps LMFP, with manganese cathodes. So I'm going to start lowering the ASP, even though the Cybertruck is still probably ramping up something insane by this stage, and we may even have the tax credit. I'll put ASPs down to $62,000. In 2026, I think Tesla may launch a new model for consumers that may actually be lower cost. It may even be the compact Tesla. Well, demand would go crazy. And perhaps it even starts at $35,000 present day value. No, not $25,000. Tesla don't need to make a $25,000 vehicle. It's simply too much value for such little price. Just about anyone in a developed nation can afford a Tesla at that price if they really want it, and would be the lowest cost of ownership car possible. I think a $35,000 Tesla seems like a low enough cost these days. It will, however, still have a great margin. I'll lower the ASP to $58,000, along with further expansion of standard range Model 3s and Ys. Remember, even if there is a low-cost compact Tesla, it's not designed to be the biggest selling Tesla, like we once might have thought, before we saw the Model Y demand go through the roof. In 2027, there may even be some more Teslas available, perhaps a coupe, a van or minivan, large SUV. Yes, I know there is meant to be robotaxi, but this was a non-FSD model. But these new vehicles that Tesla are launching, well, these won't be that lower cost either. Also, by this time, consumers would have a paradigm shift on spending when it comes to electric vehicles and understand the value of them better, well, at least a Tesla. the amount it saves in fuel, depreciation, insurance, servicing, etc. Therefore, they can justify spending more as they realize a Tesla is actually an asset, not a liability. It will just take them some time to catch on. But I'm going to lower the ASP to $55,000. Alright, by 2028, perhaps there really does need to be more affordability for consumers, and there may need to be more affordability to reach these numbers. On the other hand, Tesla are cheaper than Mercedes, Audi, BMW, Lexus, Cadillac, etc. They likely sell 10 million collectively. However, we also know that the most common trade-ins are the likes of Toyotas and Hondas, not BMWs. So there is clearly a market for that many sales at these prices, especially when legacy are no longer. There'll also possibly still be this tax credit in the US, and perhaps 1/3 of all Teslas are sold in the US. I'll lower the ASP to $53,000, and just lower it slightly for the next 2 years too. On top of that, Tesla may have ramped up the semi-truck to something crazy, and they could be costing around $200,000. I know I'm probably doing the opposite of most forecasts by raising the ASPs, and a lot of others have to lower the ASPs in order to justify the demand. They haven't gotten their heads around it. Nor have I heard any of them explain how they even got to their ASPs. They just think supply and demand. Well, if Tesla wants to sell that many vehicles, they'll need a lot of demand. And in order to get that much demand, then Tesla will need to lower their prices. Except the extra demand is coming from more expensive vehicles like the Cybertruck. It's also coming from more additional value that these cars bring, like lower insurance cost. Or what if they offered vehicle to grid and could also save you on your power bills? There is so much real value Tesla is capable of offering that consumers will pay more for. Also, I'm not even factoring in the additional demand from FSD. This is just the demand for electric vehicles, not autonomous vehicles. If Tesla had FSD in all these vehicles, then the prices for the cars would be a lot higher. ASP would probably be $10,000 to $15,000 higher at least, or possibly more if you factor in the lifetime subscription models. I think there'll also be a lot of extra demand for the 4680 Model Y as it is, with faster charging speeds and software upgrades, and all the other extra features we've not even been told yet. Okay, so we have ASPs and we have units sold. We're going to leave out regulatory credits, so that would mean we have enough information to calculate revenue. As you can see, by 2026, we break $500 billion in revenue, which is about 1/3 more than Apple's revenue for the last 12 months. And by the end of the year, we managed to reach $1 trillion in revenue. Again, just from car sales alone. No robotaxis or FSD or energy. This year, margin won't be as high as the others due to the higher prices having a delay until realized, not to mention the 2 new factories and the downtime we faced in Shanghai. But next year should see a good jump, although Cybertruck ramping may have a slight effect too. But 2024 should see some real impact. Even with new factories ramping, which there always will be somewhere, there should be a large enough base of vehicles to support a solid margin. Also, all new factories will likely carry a better margin too. So by 2024, we will hit 39%, but we did say we'll build 2 new factories in 2025, so I'll wind it back down to 37% for that year, then back to 39%, and around that for the rest of the decade. Perhaps dropping slightly due to lower cost vehicles, but at the same time we have technological breakthroughs and battery advancements and more software, and lots of other things that could improve margin. Fewer parts, fewer processes. So I'm happy to not drop it too drastically. With that, we can calculate the gross profits. And around sometime in 2026 again, Tesla have matched Apple's gross profit. Apple currently at a valuation of $2.7 trillion, with very little left in the pipeline, compared to Tesla, only about 1/3 the way to their production target. Oh right, yeah, and just for vehicles, no energy, robots, or even FSD. Therefore, you could justify a $5 trillion valuation just for the auto business, if Apple was anything to go by. And by the end of the decade, we're at $400 billion gross profit. That is so much money. OPEX is really going to start looking negligible. We'll increase it at a reasonable rate. But remember, this is only for the auto business, and Tesla only need 1 headquarters. On top of that, the biggest R&D expense is FSD, and we aren't including it. But when we subtract that, we're left with our operating income. Now, the tax rates will get higher as the sales increase. Why? Well, because Tesla get an insane return on capital when it comes to their buildings. Without FSD, probably something like 10 times return. As in, when the factory is ramped up, it earns about 10 times as much as it costs to build. Yes, earns, as in net profit. You can only depreciate the factory once, which would be about 1 month's tax-free income. Anyway, there will simply be less to depreciate against tax relatively as profits rise. Then that leaves us with earnings. Well, sometime in 2025, Tesla will have broken past the equivalent of $100 billion a year in net profit mark, which is about what Apple make in profit. So Tesla should reach Apple's current trailing 12 months of profit by around 2025. Again, Apple is nearly $3 trillion. Then surely Tesla's vehicle business alone should be worth a lot more than that by 2025. Wow, we've just done something awesome. I felt really good about that ramp rate, assuming everything happens how it is meant to. I think those margins are very possible, even if Tesla is selling the lower cost vehicles. Alright, this is probably a good prelude into our actual 2030 targets. There's still a lot more to figure out there first, and then we can compile it all together. But even if you gave the company a P/E ratio of 20, this is a $6 trillion valuation by 2030. To get about 6 times return on your money over 8 years is still exceptional. But what will the rest of the company do on top of that? Well, that's what I'm here to find out. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.